Bitcoin and gold, two assets, one monetary revolution. This channel tracks the rise of Bitcoin and gold in the new financial system. These two strategic monetary assets are shaping the future financial reset taking place in the global economy. We do this by covering Bitcoin, BTC, technical analysis, gold, XAU, technical analysis, and how institutional capital flows between these two assets. Today, we look at gold technical analysis from a BCG simplified market structure perspective. This dashboard quickly gives us a snapshot of the current gold price action. The dashboard looks at three core areas: trend and swing direction, price movement and price zones, and current volatility. Last week, gold experienced some selling, but so far, higher time frame structure has not been violated. Gold structurally remains bullish with volatility starting to rise. For a while, the $5,000 price level was being defended, but that broke last week, week 12, and the rest of this video will explain what that means. We always give you value by giving you just three numbers you can take away. These three numbers represent the current structural price levels gold is working in. They are $5,700 resistance level, $5,000 equilibrium level, and $4,400 support level. Today's analysis, we cover: what is current price action telling us? Which price level are institutions defending? What could change the price structure? Welcome back. We are BitcoinCapitalGold. A global financial reset is quietly unfolding, with governments and major institutions positioning for a future where Bitcoin and gold form the foundation of the next monetary system, replacing our broken global fiat system. This channel's only focus is just these two assets, Bitcoin and gold, using structured technical analysis to understand market structure and researching how capital rotates between these two strategic assets. If you want to stay ahead of this far-reaching monetary shift, this channel is designed to help you understand this move early. Let's get into the details. Overall, the trend is up. On every high time frame, yearly, monthly, and weekly, we have both the trend and current swing direction pointing up. Yearly started its ascent as far back as 3rd November 2022 at $1,618. The last monthly low was on 14 November 2024 at $2,541. The last weekly low was on 2nd February 2026 at $4,423. This week has been a bearish week, with Friday producing a low of $4,478, so just above the weekly structural low. Let's dig deeper now into price action. We continue to be working inside of the dominant range, defined by the three bars created on 29th, 30th Jan, and 2nd February, until proven otherwise. The dominant range has contained all price action from the high of 29th January 2026 to the decline low of $4,400, the structural low. With a close last Friday of $4,478, sellers are very close to challenging this low. February saw price action bouncing higher from its monthly midpoint on 12 February 2026, whilst March, so far, has been a bearish month after peaking on Day 1, Monday 2nd March 2026, at $5,360. From that peak, we see a swing pattern of lower highs on 10th March at $5,249 and on 17th March at $5,049. Lower lows were formed on 3rd March at $5,005, on 16th March at $4,970, and this current low on Friday, March 20th, at $4,478. This tells us we are in an uptrend on higher time frames, but a downtrend on the lower daily time frame. For 10 days straight, from 3rd March to 13th March, buyers held the psychological number of $5,000, the equilibrium point. However, this last week it broke on the 16th. The day after, on 17th March, a feeble rally to a high of $5,049 tried to recover, but the attempt was superficial. Sellers, sensing weakness, seized the opportunity to push prices lower, and an onslaught of selling took place for the next 3 days, on 18th, 19th, and 20th March. The sellers ended last week with strength. We now need to see if next week, week 13, will see any follow-through and break the structural low of the dominant range at $4,423. Now we look at our Fibonacci zones. The Fibonacci resistance zone sits further up at $5,369 to $5,383, and the Fibonacci support zone sits at $4,209 to $4,229. Price action is trading below the equilibrium point of $5,000. As this is the balance point, the line of least resistance goes to the sellers. Clearly, we would need to break the dominant structural low to challenge the Fibonacci support zone. Next week could be an interesting week. Volatility gives us indications of momentum. First, looking at the ranges, we see an expansion over the last 4 weeks, ranges of 188, 423, and 235. The monthly ranges are starting to creep up. The prior week was in a range of $879, and last week saw a range of $956. Another way to look at volatility is by measuring the close to the open. For the last 3 weeks, gold has been closing below its open. Week 10, the close was minus $197, then week 11, minus $125, and week 12, the decline jumped to minus $435. We are now closing lower than the open. On the monthly, it is more pronounced, with a close below open of minus $785. The month has still to end. Volatility is creeping up on gold as it defines its next move. For now, the dominant range between 4,400 and 5,700 is still containing all price action. With the structure and key levels now defined, the market can realistically unfold from here in 3 different ways. Scenario 1, buyers respond to the selling. For the first scenario, buyers would need to push back up above the equilibrium point at $5,000 and begin testing the resistance zone between $5,369 to $5,383. If that level begins to break, the next structural objective would be the range high near $5,700. Scenario 2, range continuation. Week 12 saw a decisive move down, and next week will tell us if we start treading water or one party makes decisive moves. Scenario 3, support failure deepens. Now that sellers have broken the $5,000 equilibrium, they've earned the right to test the structural low of 2nd February at $4,423. A break of that low will pave the way to test the Fibonacci support zone. Before we finish, let's simplify everything into the 3 numbers that matter most right now. If you remember only 3 numbers from this entire analysis, remember these: $5,700, the range high; $5,000, the equilibrium point; and $4,400, the range floor. Currently, gold has an upside bias. So the structure is actually quite simple. The dominant range is controlling everything between 4,400 and 5,700. This last week has been bearish, and we can see a swing pattern of lower highs and lower lows on the daily. Sellers fell short of testing the weekly structural low of the dominant range. Some might read this as sellers lacking conviction to go lower. It appears that the selling is coming from retail traders through margin calls or not being able to hold losses. Institutional traders and sovereign wealth are using this opportunity to buy. Volatility is increasing, but we still have to see strength in a move in either direction. And that's your simplified market structure view of gold. Every day, we publish a market structure simplified briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets. They are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these 2 assets interact is no longer optional. This channel is designed to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.